And I can tell you, so April 2nd is going to be a big day. We're going to roll out the reciprocal tariffs. But what I can tell you, and I would encourage your viewers and the public and the media to follow, going into April 2nd, and already now we've seen some of our most imbalanced trading partners come forward and want to drop their tariffs. So by President Trump pushing forward with a tariff plan, reciprocal tariffs, if you drop yours, we'll drop ours. We are already seeing some of the worst offenders come down. April 2nd is an important day, but I would also tell everyone to look what happens from April 2nd to, say, June 30th as the other countries come down too. And President Trump's created a win-win situation here. Either the tariff barriers come down, the U.S. can export more, trade is fairer. It's always been free, but not fair. Mm-hmm. And then we, or if they don't do it, we'll take in substantial revenues.
Hi, everyone. This is Lad Dilgard. Welcome to another episode of Stand and Speak. I just got off of a long visit to the South Pacific, and I am looking to ramp up production of these episodes again here in the next couple of weeks, and I'm getting caught up on all of the enormous amount of politics going on with the new Trump administration. Today's fact of the day: tariffs are a big deal. Everybody's talking about them day and night. This is something that wasn't talked about before Trump took office. But according to the World Bank, the average U.S. tariff rate is 1.47%, which is 59th lowest out of about 200 countries worldwide. So it's at the top of the bottom third. For comparison's sake, Canada's is 2.35%, or 60% higher on average versus the United States. Mexico's is lower than the U.S. at 1.21%. Interestingly, countries that are very poor and very corrupt have much higher tariff rates than the United States. Venezuela, I think, has averaged 13%. Africa and Asia, they have very high tariff rates in a lot of countries. And the reason is because they protect those tariffs. They try to protect corrupt local industries, often owned by the government or ran by the government's colleagues and friends and everything like that. So they really ramp up those tariffs in corrupt, kleptocrat, communist, and dictatorship countries in order to protect extremely inefficient companies that are operating in that country. So there's a lot of trade-offs to tariffs, and we're going to get into those today. So this is my take on tariffs, and you could talk to economists and professors and people from the Federal Reserve and politicians, and they will give you a lot of different perspectives on tariffs, but there are trade-offs with assigning tariffs, which are a tax on goods coming into your country that produces revenue for your country. And there's a lot of, like with any tax, there's usually two sides of the question. So why is Trump pursuing tariffs, and why does he like them so much? I've got four reasons. Number one, foreign policy leverage. He uses the tariff tool to wield influence with other countries and get them to do what he wants them to do. For instance, he threatened large tariffs on Canada and Mexico in order to get them to provide more troops to the U.S. border to stop the flow of fentanyl and to participate in limiting illegal immigration to the United States. And after some howling from Canada and Mexico, they did just that. So that, to me, is a win. And the access to the United States market, which is the largest market in the world, has largely been given away for decades. So we have a hard time often accessing other markets with our products, the American companies, and we just give away access to the United States market. So Trump and his trade people are saying, hey, you know what? We'll give you access to the United States market, but you have to be an ally across many different things that we're trying to do. You can't be unfair, which is called being fair with trade is having reciprocal tariffs, or if we raise our rate, you're going to raise yours. And Trump has said for a long time that other countries are not reciprocating, or we're not reciprocating with their trade rates. They're charging us more than we're charging them. So that is number two, which is stopping other nations' unfair trade practices.
And insulting are your words here, but that's what many Canadian leaders have said about the actions President Trump has taken toward Canada. And what do you think the timeline is for speaking to Mr. Carney? Because normally a sitting president speaks to a close ally very quickly when there's new leadership.
Well, the president is, again, responding to the fact that Canada has been ripping off the United States of America and hardworking Americans for decades. If you look at the rates of tariffs across the board that Canadians have been imposing on the American people and our workers here, it is egregious. In fact, I have a handy-dandy chart here that shows not just Canada, but the rate of tariffs across the board. If you look at Canada, since you brought it up, American cheese and butter, nearly 300% tariff. You look at India, 150% tariff on American alcohol. You think that's helping Kentucky bourbon be exported into India? I don't think so. 100% tariff on agricultural products from India. Look at Japan, tariffing rice, 700%. President Trump believes in reciprocity, and it is about dang time that we have a president who actually looks out for the interests of American businesses and workers. And all he's asking for at the end of the day are fair and balanced trade practices, and unfortunately, Canada has not been treating us very fairly at all over the past several decades.
Historically speaking, U.S. tariff rates are very low. If you see this Statista.com graph, if Trump implemented all of the tariffs that he's threatening right now, which is far from certain because he threatens and then he backs off when things change. But if he implemented all of those, 50% tariff on steel and aluminum from Canada and so on, overall tariffs would go back to where they were in the 1960s and 1970s, which is, for the last 200 years of American history, very, very low. So in the 1800s, tariffs were as high as, on average, 50 to 60% across all countries and all products. And that is before the 1913 passage of the 16th Amendment, which allowed the income tax. Before that time, the United States retrieved a lot of its revenue, or almost all of it, from tariffs. So tariffs right now are historically low, and the United States versus other countries in the world is pretty low. The United States has the 10th lowest tariff on automobile imports versus the rest of the world. India charges 125% tariffs on cars coming into the country. China, 25%. The EU slaps a 10% tariff on auto imports off the top. The USA's tariff on imported autos, on average, is 2.5%. I believe it's 25% for inbound trucks, as the United States has tried to insulate the most profitable product for the big three American automakers, which are pickup trucks. So we charge 25% on those, but 2.5% across all cars and trucks. Canada's rate is 6.1%. Brazil is 35%. So across the world, the United States tariffs are relatively low, and historically speaking, our tariffs are very low. So we are seeking to balance, the Trump administration is seeking to balance that rate with other countries and has threatened here and there, piecemeal, threatened tariffs on the EU that would champagne and luxury goods and Mercedes-Benz and so on, threatened them on Canada's steel and aluminum and oil and other items around the world, and it's to balance trade between our country and others. So the third reason behind the Trump tariffs, the third strategic reason, is to boost American companies. So when Trump implemented the 25% tariff on steel and aluminum, he suspended them for 30 days, raised them to 50% when Ontario Premier Doug Ford promised an export tax on electricity, which they send to northern states. And then he lowered them again, 25% when Ford backed down. So it is very tough to keep up with this. But protecting domestic manufacturers from foreign competition is part of the Trump strategy. And this was wielded in the second Bush administration as well, around steel. So the accusation has been levied at Brazil and other countries that you are dumping steel in the United States. You're making it over there and you're selling it over here at cut rate prices in order to undercut our steel industries and put our companies out of business. In some cases, like with Airbus, the airplane manufacturer from the EU, it gets giant subsidies from the government. And Boeing, the domestic producer here, has said for many decades that we are at an unfair position with Airbus because they get so much money from the German and French governments that it's not a fair playing field. So the Trump administration is seeking to protect our industries and protect our companies here. Now, in a negative light, if you take this too far, what you have is inefficient businesses here. You have businesses that get fat, dumb, and happy and charge above market rates, above market prices, because they know they don't have competition because the tariffs on the competition from overseas is so high. So they can just sit back and collect money. That is the downside here. So we're hoping that the Trump tariff threats is more to inspire other countries to reciprocate on trade and to just move in the right direction, and that these tariffs won't be permanent and long-standing in a way to protect U.S. industries. It's more to give them a fair playing field so American companies can rebuild, bring jobs home, produce here, be efficient, provide consumers the best prices and the best choices, and compete fairly, as opposed to countries like Venezuela, where tariffs are simply protecting inefficient government-run businesses. So that's number 3, protecting domestic businesses. Number 4, our government will get revenue out of tariffs. So Trump proposed a universal baseline tariff of 10%, and his administration projected that it will raise U.S. revenue by $2.95 trillion. Now, fact check me if I'm wrong. I believe that is an annual number that they looked at, but I saw conflicting commentary on this. Some said it was over 10 years, some said it was annual. But 2.95 trillion, especially if that's an annual number, that's a lot of money. We have a $2 trillion annual budget deficit. We have a $36.5 trillion national debt. Our government needs that money. Now, as I've said a million times, the U.S. government doesn't have a revenue problem. We bring in lots of revenue, over $5 trillion. We have a spending problem, as Doge is uncovering. We're giving away money to dead people, and we're giving small business loans to 10-year-old kids during COVID. We're paying for gay rights parades in Burma and DEI training in Indonesia and whatever. But the Democrats and some Republicans have been giving away money for so long that we're nearly bankrupt now. Tariff revenue, if it was realized and brought in, and there was no corresponding damage to the economy, and there was no inflation, that would be a great thing. So there's a lot of debate as to whether that would occur. There's economists that say, this will cause economic damage, it will cause a recession, it will cause inflation, and so on. And after the transitory inflation lie of 2022, where all the economists, all the Federal Reserve, all the Treasury Department said, this inflation is just transitory, don't worry about it. 6 months later, it's even worse, and we had 9% inflation. The Federal Reserve had done nothing. We were lied to. Either that or they were incompetent. So I have a hard time believing experts projecting economic impact from Trump tariffs when they've been wrong about so much. So there is definitely a trade-off. We definitely need the revenue, and tariffs will bring in revenue. The economic damage from tariffs and the impact on consumers is highly debatable. So those are the four reasons behind the Trump tariffs. And so what's not to like on this? So U.S. markets have been edgy. They were down at one point 10% the past week. I believe they're down 7% now since Trump took office. They rose sharply up to the point where Trump took office, and then they've leveled off, and they're jittery. The markets are jittery. Number one, if you get bent out of shape by a 3 to 10% market correction, if you want to call it that, or reduction, you shouldn't be in the market, because investments are a gamble based on the knowledge that you have at any time. I don't care if you're investing in a lawnmower or General Motors. It's a gamble. So markets they're going to gyrate. They gyrate on thousands of pieces of information that come in daily on corporate results, on countries' trade policies, on wars, on oil prices and gold and a million other things. If they're going to gyrate on tariffs, they're going to gyrate on tariffs. And long term, the market does not equal wealth. The German stock market right now is at an all-time high, but the German economy is in a recession. Germany's unemployment rate is 6.2%, which is not good. So, if you're a worker in Germany who's lost his job or is going to lose his job, I don't think you should point to the stock market and say, hey, but the stock on, German companies is great. It doesn't offer a connection there. Sure, we all want high asset prices. We all want high stock markets. But the market gyrates, and the market does not equate to economic growth or to wealth, especially with the middle class, who may not have as many assets as Jamie Dimon or something like that.
The reason people want to go back to the 70s is in the 70s, the largest share of our GDP was in the middle class. And that was not separate from the fact that 25% of our economy was in manufacturing.
Right, the largest share of our GDP
was in the middle class, the biggest chunk, the middle class,
most
people
of
who
what
were
was
middle
produced
income.
Came from the middle, and now it comes from what? The rich.
Now, the top 20% controls over 50% of the GDP. Our economy was an upward funnel of wealth, and the largest share, which used to be in manufacturing, which gave a lot of working class people a middle class standard of living, now the largest share is in real estate and finance, meaning that asset-rich Americans are controlling over 50% of the GDP, and they have left the working class out of all of that prosperity that was generated. That manufacturing is still being done. It's just being done in other countries. It is still
for wages we will not work for.
That's exactly right. You're right, Bill. That's what the tariffs are for. They are to make American workers more competitive in the global market. Why are we accepting that there should be a race to the bottom? You know, China, what is its competitive advantage over us? It's that it pays slave wages. Why should we accept that? They're still manufacturing our PPE, our pharmaceuticals, our cars.
So in conclusion, here's my summary. You might end up paying a little bit more for some products through all of these tariff gyrations that are going on. We don't know. I wouldn't worry about it. I'm not worrying about it. The market will come back. It came back strong on Friday. I think it was up 1.5% or something like that. But tariffs are not broadly inflationary. And I will give you an example. The Smoot-Hawley Tariff Acts of 1930 they were largely blamed. This is where we increased tariffs across the board, started out in a way to protect farmers because agriculture was half the economy or something like that. And we passed all of these tariffs in Smoot-Hawley in 1930, and it was been blamed for making the Great Depression worse, which is highly debatable. But one thing it didn't do was cause inflation. The 1930s, the Great Depression, was caused by a deflationary period related to banks and the Federal Reserve tightening credit and tightening the money supply, and an onslaught of regulations from the FDR administration. It wasn't inflation that caused that. So if you're going to put in a dramatic tariff increase like Smoot-Hawley, and it doesn't cause inflation, then Trump here and there going from 1.47% average tariffs to 2% average tariffs, it's not going to cause inflation. It's not going to cause a recession. It's not going to make the market crash forever. You may end up paying a little bit more for a broomstick, maybe even more for a car if steel tariffs are sustained, and then that goes into the price of washing machines and cars and so on. But the rest of Armageddon's not going to occur. So sit back and relax on the tariff issue, let it play out, and enjoy Trump's foreign policy victories that have came about as a result of these tariffs. So that's all I have today. Everybody, thank you. This is another episode of Stand and Speak. You can find us on YouTube. Hit the subscribe button, comment below, and find us on X at Lad Dilgard. Thank you and have a great week.